Tough day for the bulls as price continues to reject at a key resistance and psychological level. The kind of momentum faced towards the end of the session and into after-hours trading may have shifted momentum oscillators to the downside. This can display an opportunity for support, but with risk. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to ticker symbol FNGR. And what we are observing here are two shots of manipulation using the ARCa composure algorithm, right? So please go ahead and notice right over here these two X's marked at about 8:30 a.m. Pacific time and one at about 8:38 a.m. Pacific time. We definitely got these shots of manipulation, and price action essentially stopped the downside to consolidate for a while, right? So eventually price action, after getting this rejection continuously from the $6 psychological level, price continued to a downside here, right? So now I want you to notice how we absolutely got that 562 bottom that we were talking about, but it came with a price. Let's take a look at the buy minutes time frame, right? Here you go, and please notice right down here, take a look at that shot of manipulation right there as well, right? So we got another shot of manipulation that essentially got the price action to capitulate all the way from the area of about 576 down to 562, marking off, let's see, this was on the fly, right? So marking off a quick 2.5% loss from that position there, and price action essentially started to recover from there and into the after hours market. Now, let's see, after hours closed at about 26 minutes ago. So we closed after hours at 576, and it looks like we got the closure at 601 traditional market. So if this doesn't recover during the after hours, then there may be there may be a gap down in this, and it would pressure price action slightly to a lower level. Now, please remember that I am speaking directly on charting, right? So whatever the charts are saying is what I'm presenting to you, right? So I guess what we could observe here is that this let's see. So we had a shift in momentum here. So this actually suggested that there would be a downside, right? So this current uptrend would be over with these blue triangles, signaling a reversal, right? So yeah, price action continued to the downside here. Then on this downside, we got another blue triangle suggesting that this trend is over, right? So now upon getting this upside here, we got another little validation triangle saying that this upside was now over, and we got a downside, right? So please notice here that upon this huge downside, we're starting to get the signal that we may potentially be at the end of this downtrend, right? But I don't want to trust this too much. First of all, because we're on the 2-minute chart, right? So this is it's a micro time frame. This is not speaking directly on any upper time frames whatsoever. So we must practice, we must be very careful here. Okay, so I really just wanted to show you what the ARCa algorithm was actually presenting for us, as it did print some iterations of market manipulation, right? So you can clearly see here, right at that print, price action essentially capitulated, then recovered, right? So if you are in the market for algos, right? So definitely get in touch with us at ARCa indicators at gmail.com, right? And we'll go ahead and pass you all the information and pass you the subscription packages and all that good stuff, right? So ARCa indicators at gmail.com. Either Ike or myself will answer, so please go ahead and reach out now. Let's go ahead and move on to the next chart here and see what we have. So this is actually what you're observing here is the ARCa trend line indicator, right? So this is a momentum-based trend indicator to identify potential market trend. Okay, so yes, we are currently at the top side of this regression here, right? And it's showing that we could be on a downtrend, right? So now I don't want to trust this all the way though, and the reason why is because we are actually upside of the trend line of the regression here, right? So meaning that we could be at a support right now before a continuation to the upside. Of course, there could still be some further downside, specifically here, right? So you can see here that this candle right down here would be at around 554, maybe 550. That area there is an inflection point. This inflection point here was broken, so this is now introducing a resistance that then could face the next inflection point, which would be at about 556 to around 554, maybe down to even 550, right? So right around that area, we could face a bounce, and there may be some type of recovery. I can't guarantee that whatsoever, and there's no way that I can actually officially tell, but there are things that we can observe here in the charts that may be able to hint at some things or higher probability outcome, right? So let's go ahead and now take a look at this. I have prepared this triangle here for us, right? So this is a right angle triangle, and what I have to say about this is that a lot of the times these triangles have actually failed like this, reclaim the inside, and then they break out. Right. So now another thing to observe is that I usually don't like to print these right angle triangles at the top of a trend. They do tend to suggest a downside. Right. So if we were to face a downside from this, then the first target to observe here would actually be upon the breakout from the triangle itself. So take a trend line from the top side, the hypotenuse, to the bottom side of the triangle and apply it to that area of breakout. Right, so in this case, price action or the psychological target would lead to, guess where? That's right, 556 to the area of around 554 where we were just talking about it, maybe even 550, right? So the formation here is suggesting, is suggesting a target like that. So we have to take that into consideration, and also for the simple fact that we got this massive downside, all over today, starting from around, starting from early. So now, of course, there are more targets to observe here because you know how the triangle goes, right? So we have to make sure that we can prepare ourselves for the inverse play, right? Or for the short play. So in this case, the secondary target located right in the center of the triangle, that is suggesting a bottom side of about 543. Okay, so that already rhymes kind of with the 543 to 550 range that we were talking about, right? So now the last target, of course, would be the top zone. In this case, it would be from here. So let me go ahead and take that measurement there and then apply it to the price action right over here, right? So that would be suggesting a bottom side of about $5.16. Now, all of these targets are actually confluent. They are pretty confluent to historical resistance and support levels from back here. So yeah, team, I'm just kind of putting a little bit of a warning out there in case we do get a sell-off here. But there's nothing I can do to control someone else's pocket, right? So if someone just feels like they want to long the crap out of this asset, like around here, then I'm not going to know that. I can't know that. Right. So, but what we can identify are our tools in the chart, right? So, for example, trend line indicator right here, ARQ is showing us that it does have the ability to identify pivotal points. So you can see here that it identified the pivots right before every pullback, right? In this case here, this was the pivot towards the upside, called pretty nicely here. Even in this case here, it just as soon as it closed, they got a pivot, meaning that it would face the downside. And here we have a present pivot, and we still have not printed the reversal pivot here. So in this case, yeah, the ARQ trend line is telling us that this is still being honored, and there may be a continuation to the downside even still. Okay, team, so let's go ahead and move on to the next chart here and see what we have. So the SMA 50 on a daily time frame is landing at a very curious target. Check it out. It's landing at $5.50. Well, yet again, we're looking at that target, right? So please remember 556, 554, 550, right? So that's kind of what we're observing here. And I want you to take a look at the geometrics right over here. Look at the the one spot 272, right here at that Fibonacci retracement at $5.52 as well. So there is another hint there. So moving average at a 550, we have the one spot 272 at 552, geometrics at the previous the psychological take profit at about let's see, 556. Oh my goodness, there's so much rhyming within that target there. So a lot of the times when you tend to get a lot of rhyming there and get this confirmation, or you get the bias for a downside, then you probably would it would be wise to maybe take that into consideration. Next thing that we want to take a look at here is the 3-hour Bollinger Bands, and please notice that the bottom side of the Bollinger Bands is where. That's right, 548, right? Again, rhyming with that 549, 550, 552, 4, and 6. So now we have a total range. We have a total range to observe here. 548 to around 556 could be a drop, and it could be an area for us to face a potential upside. And I would have to say that facing a downside to that zone there, actually, let me see. Yeah, well, you know what? Yeah, I would say right around that 548 to 544, that could, it may be able to be playing like a short-term bear trap-ish, right? That may be, it may be able to happen there, because you're touching down to 550. You really want to see the downside after that, right? Especially seeing that you can convert a few things into resistances. You can break major supports on the way down. It's just that this is the daily SMA 50. It's pretty strong, and I do have some conviction that it can bounce from there. Not only that is that we have that geometric 1 spot 272 at 552 lined up with that as well, and a couple other psychological targets, right? So let's move on to the next chart here, team, and see what else we have. So the daily time frame here, this was the price action from today, not including the after hours trading, but very curious bounce here off of the EMA 30, right? So, almost perfectly added. And to be perfectly clear, I think the weekly time frame would be a better kind of look for this, because I think the EMA 55 played out a little better on the weekly. So let me just go ahead and load up that EMA 55 and load up the weekly time frame. Check this out. The SMA 10. I'm sorry, I must have confused this, right? So yeah, the SMA 10 at 562 was that bounce from today, right? And this is, we have a chance here. We have a real chance. It would be awesome if we didn't fall beneath 562, but I'm already thinking that we can get that 550, right? So if we are able to maintain this weekly candle upside of 562, then that would be the first candle closing clean outside of the SMA 10, which would then introduce a continuation to the upside. And that would be incredibly bullish, right? But there's no guarantees in that. And of course, we have to observe price action and see what it has for us. Okay, so now let's take a look at this. This is a bi-daily divergence chart, right? So what you're observing here is actually the opposition of price action versus momentum, and momentum represented by the RSI, right? Relative Strength Index. So what you're looking at here is from this trend line here, creating a lower high. You can actually pair this with the pivots of price action right over here on the yellow trend line, and you can see that it's creating a higher high. So this is actually a drive of a regular bearish divergence, right? So that's usually when momentum, or the indicator, right? Momentum indicator creates a lower high, and price action creates that higher high, right? So that is, it is located here for your convenience, right? Just so that you can see exactly what I mean by this, right? It's very important for you to identify your divergent drives so that I can assist in a direction bias for you, right? So now if we pay some attention to this, the bottom side of the first target, right, which would be from this point here to this point here of this wedge, which we're currently facing a downside from, that would lead to a target down to around $5.12. These targets here, I'm just speaking of in the event to where we break the 550, right? So just know that we would need a pretty large closure beneath that 550 in order for us to introduce lower targets, okay? So we could face a target down to here about 512. The secondary target would lead to around, let's see, Wow, yeah, that would be about 398, and then the other target, the largest one, would be 239. So this could also play into the bear trap theory, right? So seeing that this rising wedge is getting this break to the downside with a clean validation or support or a resistance confirmation, right? This may actually get some bears to think that they're officially going to get the downside here to around the $2.37. But as soon as this thing actually touches that 550, there may be a shot at an actual rejection here, and that would actually be the longs using the bears as liquidity, right? So I can't guarantee that just now, team. I know that there are several metrics for us to observe, and also more time in the market space for us to observe price, right? So we're gonna be streaming this in the AM. So please make sure to come by around 6:45 AM Pacific time for the market during market hours trading. Right, team? So today, yeah, we were going over a few tickers: TTOO, RVLP, AVTX, NVOS, CRGA, FNGR, ASRE, a lot of tickers, right? CLNV was in there too, and NVOS. Yeah, you know the works, right, team? So yeah, let's go ahead and just look at this here real quick. We have an immediate short-term time frame resistance coming up, and then from there, yeah, there is kind of a downside in every single moving average. I'm sorry, in every single RSI, right? So yeah, it's leading towards the thesis that we already know could happen. So in other words, we are looking at a potential upside first, pre-market, maybe into the early session, and that very short-term upside could actually lead to a resistance right at about again, right, 593 to 604. And we would then get that continuation to the downside there, team. So now you know the plan, you know the targets, you know the deal here. Please go ahead and practice your risk management carefully, right, team? This is going to be very important for us to try to survive, to trade another day. So make sure to come by and hang out with us. And also, please remember that I have offered the 30 seats to the ARC Masters course. And that is something that, let's see, I have around 16 seats. So I have 14 seats left. Already 16 seats have been reserved, so make sure to get in touch with me at arcmasterscourse@gmail.com so that you can get the information to get enrolled, right? So this is going to be a 16-week, it's kind of a mentorship program, right? Or a charting program. So please go ahead and get in touch with me at this email here for that information, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, I wish you well, a very, very good rest of your night, and I will catch you at the bell mañana. Adios.